Hi, everyone. It's Rita Desnoyers-Garcia from Becoming Awake and the Calm Mom Alliance. And today I am really excited to introduce a colleague and a friend. Her name is Geneva LeFevre. LeFevre, I say it in the French way. Anyway, she is a financial educator, a financial professional, and she is going to be talking about the essentials, the fundamentals around money and finance, because I know that stressed out moms think about money all the time and they're always stressed out about it. So, this is one way you can decrease the stress, increase the amount of confidence and empowerment you have is to get this education. So, this week we have Geneva. Welcome.
Thank you so much, Rita. And again, just thank you so much for giving the space and the time for me to do this. Just super excited. This is definitely something that I'm passionate about, and I'll go into it a bit more. And actually, I can just jump into it. I'm going to go ahead and share my screen. All right. Are you able to see that?
Yep.
Okay, beautiful. So a little bit of story time, or at least I guess time about my story, right? So like Rita said, my name is Geneva LeFevre. I was born and raised in Utah and then moved to Texas here in August. And as you can see, that's a recent picture of me and my daughter. As we all know, as women, they're a big reason why we wake up in the morning, why we do our business, and why we keep going. And as you can tell, I had her super early. I had her at 15, which has definitely made my life a little bit of a different, path than I would say majority. But of course, just super thankful. And of course, like having her at 15, as soon as I turned 16, I got the first job possible. My mom was the district manager for a fast food restaurant, Carl's Jr., and I started working on my 16th birthday because I needed to take care of my daughter, right? And after doing that for a few years, I realized that if people didn't come in and I was promoted as a shift leader, that I had to stay late. And so I always I couldn't really plan evenings with my daughter, or I'd be excited to go and see her, and then I had to end up working late. And so eventually I got sick of it, and always thinking, oh, maybe I should work overtime to make more money, or maybe I should spend more time with my daughter. And having to choose between both of those things, I feel that it's very real. And shortly after like 6 years doing that, I decided I needed something with set hours. And so I actually did debt collections for 6 years, which is the total opposite of what I do now. And I think that's one of the reasons why I just have a huge heart and passion for what I do, and why I'm so proud to be a part of this crusade. Also looking around, I know, when I think about Walmart greeters and things like that, typically it's older folks who probably thought they had enough in retirement, or, you know, thought they had it all planned out and then retired and possibly had to go back to work because they didn't have the money that they needed to actually retire. And just so many things. Another big reason, and I'll be a little bit vulnerable here, is my brother was working on the railroads in Texas and in Florida, working like 80 hours a week, busting his back to provide for his family and his loved ones. But he was super stressed when it came to money and overwhelmed. And I actually lost him about 4 years ago due to suicide. And I think that's a big reason why finances just are stressful and overwhelming. And then also, I look at my parents. That's another example. I don't think either of them really have anything for retirement. And it's not anybody's fault. It's just the education isn't out there. And so those are a few reasons, but I'm just so passionate about what I do in my immediate life, right? But we also look at all the GoFundMe's all around because people aren't properly protected. And just so many stories. I'm sure you can even think of, some people that you love that might be in similar situations. And kind of going through the same thing. So that's a little about me and my story and some of the reasons why I'm so, so passionate about what I do. And so from here, I am a part of a brokerage. We're called Revolution Financial Management. And we believe that financial literacy isn't just for the wealthy. And so welcome to our revolution. And then here you can see our website. You're more than happy to visit that and look into a little bit more. I know some people like to, do a deep dive and stuff and make sure, do their research on a company. And so feel free to check that out and learn more. And then from here, of course, serving through word of mouth and referrals. And I have this on here because we don't advertise. Our advertisement is really word of mouth and speaking to people and asking who they know in their lives that could be impacted by this. It just, we're focused on building relationships. And so that's a big reason why we're word of mouth. And again, we don't pay for any advertisement. And so when you're on a crusade to serve, there is no rooftop high enough. I can't speak to enough people. I'm always just as excited with whatever client I'm sitting down with. And yeah, I can't shout it loud enough. And so just as I go through this, I want you to think of from 3 different perspectives. One, is there something here that can serve you, create more of what you value in life? Do you see yourself within our crusade? And then also, who do you know that could benefit from the information that I go over? And so from, I guess, an airplane perspective, right? These are the 4 main categories that we focus on. And what I truly love is we are focused on education and awareness. And so one of the main things is short-term and long-term savings, helping people understand the differences, right? Short-term is more emergency fund, making sure you have emergency fund in place. And then long-term when it comes to retirement, but where's the best place to put that money to help it grow and use it to its full advantage? And then insurance protection. This is very important as well. I know that normal, or what people typically do, they have life insurance through their work, their 9-to-5 job. It's one of their benefits, and don't really have any private insurance. The downside, and a lot of people aren't educated about this, at least I know I wasn't, is I thought I was good to go, but you realize if you quit or you get fired, you no longer have that protection with you. And so, God forbid something happens while you're looking for another job, or you get a job and it doesn't have benefits. We just want to make sure everybody's properly protected by owning their own life insurance policy. And then debt solutions. We have amazing strategies to help people get out of debt far quicker than they can on their own. And it's not necessarily anything we specialize in. I know Diane Noto, that's something that she especially specializes in, but it's also a service that we're able to provide. And then preserving wealth, making sure that people are properly set up with trust and wills and things like that. And so from here, this is how we do it. It's called the financial needs analysis. So we sit down with families and individuals. We look over income and expenses. And typically what we find is half of the income going out, half is going towards living expenses, and then the other half is split up between taxes and debt, or some variation. And most people say there's more month at the end of the money than money at the end of the month. And so what we do is we find money hiding in taxes and debt with different strategies that are out there to open up another piece of the pie to put towards their savings, to whatever is important to them. Everybody's in a different situation. Some people I just help get out of debt. And then we look into future goals, right? But some people it's retirement savings or children education, maybe not education, but helping them start a business if that's what they want to do. Proper protection or freedom from debt. And what I love and why I can say this is a crusade is I don't charge a dime to do this, where we sit down, go over where they're at, where they want to go, and show them different options and plans that are out there for them. There's not a way to pay me, but that doesn't mean that I don't get paid. I get paid because essentially I'm a broker. I'm partnered with over 150 different AAA rated companies, both financial and life insurance. And these are just a few, like Transamerica, Pacific Life, Nationwide, and so on. And so I love it because I get to really advocate for my client. I don't have any of my own products, or, I can only work for this company. Not saying that's a bad thing, right? But I feel like if it's one company or one product, you convince people like, oh, this is exactly what you need. But for me, I have people tell me what they need, and then I go to the market and find it for whatever their goals and dreams are. And then from here, the education that we go over with everybody that we sit with is potentially, improving rate of return, making sure that people understand the power of compound interest and how to have your money grow for you. And then taxes, lowering taxation, but also keeping more of your hard-earned money and not giving so much to Uncle Sam. And then to not lose. A lot of people think with high risk comes high reward. That's another norm. But that's not necessarily the case. You don't always have to put a lot at risk to get the high reward. And I'll go into that a little bit more. And so here are just some facts. So historic times call for historic measures. Only 44% of families can sustain a $1,000 emergency. Around 40% of families have less than $400 in savings. The average family spends more annually on interest payments than on vacations and entertainment combined. And over 50% of families have no financial plans for emergencies or unexpected life events. And so it's devastating. I sit down with a lot of people, and there are a lot of people that don't have really anything in savings. And one of the concepts that I teach people is even if it's $20 a month, like start putting that away and build that habit of paying yourself first. If you always wait to pay you and your family last, it's almost never going to happen. There's bills and all these people I think about, lining up to the bank teller and walking down, you have like the mortgage and the rent and power and all these other bills. And at the end, sometimes you're not really left with much. And so to pay yourself first. And then historic times call for historic measures. Our system is designed specifically to help families reclaim their financial stability, build security, and create lasting freedom for generations to come. That's our mission, and that's what we strive for with everybody that we sit down with. And then also, I figured since we're in Rita's group full of mama bears, facts about women in finance. Only 41% of women can sustain a $1,000 emergency. Less than 15% of women feel confident when it comes to their retirement savings. 60% of moms reporting financially unprepared for unexpected medical expenses. And only 20% of mothers feel adequately prepared to send their children to college without financial strain. And again, I think a lot of this just comes with the saving mentality, knowing an emergency fund. We coach 3 to 6 months to having an emergency fund in case anything comes up. And more than that, and I'll kind of go into this in more detail, but put into a high yield savings. There's some high yield savings accounts where there's no fee, but it's at least higher than the 1% you're getting at the bank. And it's fully liquid. And so you're able to pull out from it. And so I just say as a mom myself that us as moms deserve to build a secure legacy for our children. That's another thing when it comes to financial education. It's just not something that's out there. I asked my parents for a little bit of advice as I was growing up. And my dad, he's given me some good advice, but I'll definitely say the one that I learned the most from him was to always make my minimum payment, to never be late, and that credit is so important. But when it came to other things, like he's not prepared for retirement. And so he just doesn't have that education. And so he's not able to pass it down to me. And that's another big thing that I'm focused on is let's change that. Let's, get financial education out there so we can pass it on to our children and change their lives forever. And so one of the first concepts in that financial needs analysis, we focus on a financial independence number. And a lot of people don't know what that means. When it comes to retirement, a lot of people tie retirement with age, but it's not age, it's a dollar amount. And so a financial independence number is how much money do you need in retirement to never rely on an income anymore? Other than your retirement, right? To not have to work anymore to be retired. And a lot of people don't know what that number is. And so do you know what it will take? And looking at it from another perspective is if you don't know how much you need, what are the chances you're going to get it? It's like slim to none because you're not really aiming for a goal or a target. You're kind of just shooting in the dark. And so we find out everybody's financial independence number, everybody's it's different. They have different lifestyles. They want retirement to look a different way. But we go over accumulation, how to best help somebody get as close as possible to that financial independence number. And then distribution, what does it look like when you start pulling out of retirement when it comes to taxes and different implications and fees and things like that? And then also transfer, making sure when somebody passes away, it doesn't go to probate and things like that. So you can actually leave a legacy for your family. And then the next rule is the rule of 72. This was a concept I didn't know about either. And it explains compound interest. And so I know Albert Einstein was involved in some way, but you take the percentage that you're earning on your money and you divide it by 72, and it tells you how long it takes for your money to double. And so here, 1%, banks are actually less than 1% right now. But I like to use this example if you know anyone that's 29 years old in your family or friends or anything like that. Imagine that grandma gives them $10,000 and she's like, here, sweetie, save this and don't ever touch it. Use it for retirement. And so the 29-year-old goes to the bank and puts it in there. And wow, at 101, it's doubled to $20,000, 72 years later. And the impact of this, I know a lot of people that have money sitting in a regular bank account. It's not growing really anything. And think about what the banks are doing with that money, right? They're going out and they're getting high rates of return on our money and not really giving us anything back. 4 to 6%, this is close to like where CDs are, and also like high yield savings, right? The doubles are getting better, 18 and 12 years. But what we really look for and what we strive for is to get double-digit interest on accounts for money to grow. And these are typically long-term savings, but 10% doubles every 7.2 years. So same 29-year-old, $10,000 from grandma. From 29 to 36, it's already $20,000. So much better. And then 43, it's 40,000. But what just astonished me when I learned this is in the same 7.2 years, it went from 10 to 20. But from year 65 to 72, it doubled from 320,000 to 640. And so that's the power of compound interest and understanding it. As if, the 29-year-old puts $10,000 away, and like grandma said, don't touch it. It goes to 640,000. And without putting any more towards it, just that $10,000. And so put another, 7 years, that's over $1 million. And so this is also something that I love is we all have kids. And so thinking about starting an account for them when they're young, even if you're not able to do much, just the power of that money compounding for them as they get older or college for down payments or pay for college. We have accounts where it's completely liquid after a certain amount of time. And so the tool is to invest early in the right places with the right benefits and leave it there to build those later doubles. And then types of accounts. This is another thing. I had no idea that there was so much of this education that's not out there, but a fixed account, that's like a bank account or a CD, right? It has a set percentage and you're guaranteed to never lose money. But what I never learned or I never thought about until I became a part of this brokerage is it never outpaces inflation. And so you're actually losing the buying power of that money. And I was like, wow, when I learned that, it just so interesting. It's not really talked about. And these are great for like emergency funds. They're fully liquid, something you're able to access easily. This is more short term. And then there's variable accounts. That's like the EKG monitor, right? Like a heartbeat, it's going up and down. That's the stock market. And so anything like crypto or stocks and bonds, 401ks, IRAs, when the market goes up, you go up. And when it goes down, you go down. And the downside of this is we have no idea when it's going to go down. And so, I'm pretty young, but in 2008, when people were planning on retiring and the market crashed, they either one, retire and lock in their losses and just take the hit, or they keep on working and hope that the market goes back up. Another thing that I thought was crazy is say you have $100 and the market goes down 50%, you have $50. If it goes up 50%, you don't break even, you're actually at 75. And so it's understanding how to read the graphs. They can kind of be deceiving. You would need to get 100% just to get back to where you were. And so what we do is we look into options. They're called index accounts. And this is where when the market goes up, you go up. And when it goes down, you stay level. So it actually totally eliminates the risk. A lot of people don't know about these accounts. Now, a lot of people probably are thinking that that's too good to be true, right? And one of the caveats is some of the accounts, there's a cap. And so if the market goes up 20%, you may only get 13% of the gains. But if the market goes down 50%, you don't lose anything. And we look over any 20-year period, and we've actually outperformed the market without losing any money. And so it's just an amazing concept. There's a lot of different products out there. And so it is vital to choose strategies that fit the job in our ever-evolving financial landscape. Meaning it's not, variable accounts aren't wrong. There's a certain way to use them. Like we talked about the financial independence number. How much money do you need in retirement? It's kind of hard to figure out how to accumulate to that if you have all of these downsides and you can't really plan for it. We're really financial foundation based. And so let's set a plan where we know you're not going to lose anything. And then once you're on track, go try to hit the home runs and do stocks and bonds and all of that stuff. But really just make sure your foundation is firm too. And then the last thing is taxes. Everybody knows about taxes, or at least the basics, right? I like to say there's two things guaranteed in life, taxes and death. Not that that's positive, but it's true. It's the two things that are guaranteed. And again, even though a lot of people hear taxes and whatever, it's still not something that's properly educated or taught about. And so you have taxable accounts. This is like crypto, your bank account, anything like that. Your money grows and you pay a certain percentage towards capital gains. And so your dollar doesn't actually grow to $1, it grows to like $1.40 or whatever the case may be. I know capital gains changes. And again, this is like short-term accounts, right? It's okay for emergency funds and stuff. But tax deferred, this is what a lot of people do for retirement. Things like 401k and IRA, which you don't pay taxes now, but you pay taxes later on. And the thing that I think about and what was taught to me is, do I think taxes are going up or going down by the time I retire? Chances are they're going up. And we have no idea how high it's going to be. And so it's like, hey, I don't want to pay taxes now, but I'm going to pay taxes much later when I need it the most in retirement, and I have no idea what it's going to be. And so that was just one concept. I was like, wow, I sat down with my HR lady when I was working my 9-to-5 job, and she said, here, get a 401k. But she didn't educate me that, it's in the stock market, you can lose money, you pay taxes later on. It's just something that's not really taught. Again, not to say that it's wrong. Every account has its different purpose. If an employer is matching a 401k, absolutely. Take that free money in that match. It'll help you pay for the taxes later on. It's just something that isn't taught. And then there's tax exempt accounts. These are like Roth accounts. And there's also tax code 7702, which is actually tied to a life insurance plan where your growing cash value and the premium for your death benefit. But what's cool is you pay taxes now and you never have to pay taxes again. Now, this is great for retirement as far as the financial independence number, because we can actually see what your money is going to be at a certain age. And you don't have to worry about what taxes are going to be because it's tax exempt. You don't have to pay taxes on it in retirement. And so I like to use this example. It helped me understand. This is paying taxes on a bag of seed. This is paying taxes on the whole crop. And so what would you rather pay taxes on, the seed or the crop? Absolutely the seed. And so we help people get what they want. Again, not what we want. We listen to people's goals and dreams. They tell us what they want, and then we go and find it. So if we could show you a way to increase rates of return, create bottom side protection on your money, and save on taxes when it matters most, how many people do you think need to know about that? And then we, do a personalized plan where we break down cash flow and taxes, emergency fund, debt management, proper protection, asset accumulation, and estate preservation. We educate the individual specifically to what they're going through and what needs to shift or what changes they can make to actually achieve their goals and dreams. And so my questions is, if not now, then when? How much longer will you wait to ensure your family's financial future is secure? How would it feel to know that you're the reason your family experiences financial freedom for generations to come? If you had the opportunity right now to protect your family from financial uncertainty, wouldn't you take it? And are you prepared to learn today so your children won't have to struggle tomorrow? Again, I feel like some of these are a little bit scary or negative Nancy, if you will, but it's true. In order for, our children to learn, we have to learn. A lot of these concepts, even if you take a college course, they're not even taught there. And so we really just focus on the fundamentals. And again, it's completely free just to see what options are out there. And so from here, I just say, feel free to contact me. Here's my name, my number, and my email. And then you can scan this QR code to get on my calendar and needs analysis and see where you're at, where you want to go, and see what options we have to have you achieve those goals and dreams. Thank you.
Thanks, Geneva. We're going to take some questions. I'll go start recording and then we'll take some questions. Thank you so much for the presentation. I feel like I know a little bit about money and have lived long enough to gain knowledge. And I still was kind of like, oh, I didn't even, some of the tax stuff, I was just like, oh, that's what that means. It's like,
Yeah.
that's good to know. Okay, that's good.
Yeah, and that's what I love is, I feel a lot of people don't talk about finance or aren't comfortable, either one, because they feel like they don't have enough, and so they're not worthy of somebody's time, or they're worried about paying whatever fee or percentage to a financial advisor, and they're just going to manage the money. They don't even give them the education, but still, they feel like they don't have enough or they don't know enough. They don't want to walk into somewhere and have all these big words and different strategies thrown out at them and kind of just have trust and belief that somebody is doing what's best for your family, when really I think you should be empowered to know what's best for you and your family by breaking it down. I didn't use anything crazy. It's very basic, to the point. I can break it down even more with somebody, especially like younger generations. I'd like to meet with people younger than me even, or my age, and just really break it down. And give like different examples and things like that. And so, yeah, I love it.
So important. So important. Diane, you have a question?
Actually, more of just of a comment. It was a very in-depth. I really enjoyed that. It's so much information. It really is about education, right, Geneva? I mean, it's like there's so much that people don't know, and maybe are afraid to ask or don't know where to turn to find out, about certain things. And you were giving an overview, and I know you can go into more depth in each area,
Oh
but I
yeah.
like the fact that you tailor it to the individual and customize it for what their needs are. They don't need everything. Maybe they don't, maybe they do, but maybe they don't. And you're not going to push it. You're
Yep.
just going to find what's right for them. And I'm glad you said something. The second thing is I'm glad you said something about, younger people, or who are the people that you're looking to talk with more so. And I was thinking the same, single individuals now that are even in their 40s and 50s that, this is their life. They're single. That's their commitment. And they still want to get a handle on where do I go? I want to make sure I'm ready for retirement. That emergency fund, like you said, single moms, how about that? For sure. Because, many times even in a partner, husband wife thing, woman is the one who's working with the money, paying the bills, things like that, and working on savings. Can we afford this and so forth? So I love it. I mean, we need to get your message out even more, to and that's the thing. We need to shout from the mountaintops.
Yeah. Yeah. There's no rooftop high enough. And yeah, I mean, I always see that rule of 72 because again, I go over all that education with everybody that I sit down with before I do a financial needs analysis to at least give them the education. But I see that 29-year-old example, right? And I'm like, holy cow. Like, if I gave my daughter $10,000, by what? I don't, by what metric? I don't know, but I'll call it into the universe. She can retire with 640,000. And I mean, more than that, if I start saving now, which is my plan here next year, is to actually get her one of those accounts at 10% or higher. And even if I can do $500 a month, it will grow substantially when it comes to retirement.
Yep.
And when she's
Absolutely.
18, maybe she takes over payments, maybe she doesn't. I don't know. But we also do life insurance. It's called like the $1 Million Baby, where we do a life insurance policy on them with the cash value, where you're never going to lose any money, and put money in there. So when it compounds, say it's time for college, you can take money out of that life insurance policy, not have to pay taxes, and use that for their college or their education or anything like that.
So it's like a 529 that you can, it's like a.
So the 529 is specifically for education.
Okay.
The cash value life insurance, you can use that money for a down payment on a house, to start a business, to use for college, whatever you want.
Nice.
And so that's kind of the differences of that. I actually just got trained on that a couple of weeks ago, and I was like, wow, like when they're a baby, put 250, I mean, whatever you can do, right?
Right.
It doesn't need to be a substantial amount, but just starting it early and letting that compound makes a huge difference.
Yeah.
Absolutely. And
That's
that's the
awesome.
key, though, is to start right away if you can, or the sooner you can, 10 years old, something, that would help them get off to a better start, or, have more security than maybe you did. That isn't that the idea, is to each time you have you want your child to do better than you did, and to have more advantages and so forth. So yeah, I thank you so much. That was very educational.
Yeah, you're welcome.
Yay. All right, I'm going to stop the recording. All right, thanks everyone. We'll see you soon.